Singapore's economy shrank 6.5% in the second quarter, compared to 27% growth in the first 3 months of the year. The Trade and Industry Ministry says it is not ruling out the possibility of a technical recession later in the year. And that's where growth is negative for 2 straight quarters. But the ministry says in the short term, prospects remain positive. Ho Yin-Ni reports.
Singapore's growth momentum slowed sharply between April and June, mainly due to a decline in manufacturing, which accounts for a quarter of the country's GDP. The sector slid nearly 6% from the same period last year, weighed down by poor biomedical and electronics output. It's a reflection of the continued weakness in the United States and European Union, both major export markets for Asia. Compared to the same period last year, the second quarter only grew 0.9%, slightly higher than the earlier official estimate. But the Trade and Industry Ministry sees some bright spots ahead. The easing of global oil prices and improvements in Japan's industrial output will help support growth. The ministry also expects a recovery in biomedical manufacturing as well as overall growth in financial services and tourism. The services sector did better than expected in the second quarter. Hotels and F&B grew over 6%, while financial services expanded by 10% compared to the same period in 2010. The construction sector also grew a modest 1.5% on the back of higher public sector demand. Still, ministry officials are not ruling out the possibility of a technical recession in the coming months should the international environment worsen. If so, full-year growth could turn out lower than the projected 5 to 6%.
Those are things which we are monitoring at the moment. The risk profile has definitely increased, but not something which has come into concrete form at the moment. At least for the near term, we expect there to be some modest upturn in the second half of this year.
A second global recession is possible, though ministry officials say it's unlikely to be as severe as the aftermath of the Lehman Brothers collapse in 2008. Separately, trade promotion agency NewsSingapore now expects non-oil domestic exports to grow between 6 and 7% in the next 6 months, compared to 8 and 10% previously.